Mexico stuns the market with a half-point rate hike on the inflation gain. And they started fighting inflation long before the Fed did. But this is the piece. So this is the Mexican central bank increasing rates. This is the Fed increasing rates. All economists surveyed wrongly expected a quarter-point hike because that would be the norm to maintain that pegs. But there wasn't one economist out there that saw the depegging or that shift coming. That alone should alarm you because we certainly see how great they've been at forecasting everything. I mean, hey, we just had another surprise with inflation. And shockingly, it was mostly made up of housing and energy. Central bank surprises with hawkish turn, decoupling from the Fed. And you can see the difference. Here the Fed just went up 1/4 point, and here the Central Bank of Mexico went up 1/2 point. Now that may not seem like all that big of a deal, but what that actually does is indicates a breakdown of the currency peg system. And that is because we are going into a brand new system. But that's also going to create a lot more volatility and a lot more problems. At the meantime, since Mexico raised their interest rates by 1/2 point, hey, the peso hovers near its strongest levels since the early months of the pandemic. If you can put money in Mexican bonds, let's say, and generate more fiat, then in your mind, you're doing better. But I wonder if that's really true. However, what they say is this will help re-anchor inflation expectations because, frankly, nobody's really getting inflation under control. They're telling you that they are. Is this disinflation? Well, they just revised the numbers up for November and December, and January came in hotter than anticipated, even as the Fed slowed its rate rise. I'm telling you, all of that is look over here, and trust us. We got this. They don't got this. If you like this clip and you want to watch the full video, just click right here. And to subscribe, click right here.